Hey, Michael, thank you so much for being on this quick Q&A about refinancing. I know you are so busy nowadays, so thank you so much for taking the time.
Absolutely. Happy to be here.
Awesome, awesome. Hey, we'll jump right into it. For those of you that are watching, my name is Raquel Andal Osa. I'm a licensed real estate agent in California, and I help my clients build wealth through real estate. And today we're going to be chatting with Michael McVeigh. Michael is part of the Mark Johnson team at Homebridge Financial, and you guys are based in Calabasas, right?
Correct.
And their team specializes in residential home loans, and they are consistently ranked in the top 200 nationwide amongst all lenders, which is amazing. That's such an achievement, I think. So I think in 2020, you said you guys were able to fund over 380 transactions, and that's approximately $210 million in volume. It's phenomenal.
Yep, that's correct. Yeah, it was a busy year.
No, I know it's crazy. It's we had the pandemic going on, but I know that you guys were working so hard, and we're still processing a lot of loans.
Yes,
Um,
definitely.
yeah, so I'm very excited to talk to you today. Low interest rates is one of them. Let's
Yeah,
talk
so
about
that's the golden question, right? That's what everybody kind of wants to know is where are rates at right now? And so I'm going to kind of sound like a broken record probably throughout the day, but the bottom line is rates are going to be different for everybody, right?
yeah,
We all hear the news, what the Fed's doing, and rates are low relative to what they were, say same time last year
yeah,
on most programs, right? But as far as where rates are at specifically, that's a hard question to answer, right?
yeah,
Because it's going to depend on any number of factors, right? What kind of loan program are you going for? Is it going to be a conventional loan? Is it going to be some sort of government loan? What price tier are you in? Are you looking at, say, for the state of California, a loan up to 548,250 is going to be conforming.
mhm,
For the areas that we're in, for Los Angeles County, Ventura County, other areas in Southern California, that's going to have a high balance tier up to different price points depending on the county. And then anything over and above that, you've got jumbo, right? So those are all going to be priced differently.
mhm,
It's all going to depend on credit score, what your other qualifying factors look like. Are we doing full documentation loans? Are we doing an alternative documentation loan? So, rates are good, right? That's easily said, but as far
mhm,
as exactly where they're at, the
yeah,
best way to get that answer is to, talk to a loan officer,
yeah.
see what they have to say about your qualifying.
So for and just to be clear, we're only talking about refinancing today, even though some might overlap with purchase and refinancing. Today, we're just going to be talking about refinancing.
Okay,
Yeah,
got
yeah,
it.
I have a lot of friends that are asking about refinancing, so we'll focus more on that. Okay,
Okay,
so
understood.
awesome. So typically, what do they need to qualify for a refinance?
So refinance is going to be primarily your basic income and asset documentation, right? So if you're a W-2 employee, we're going to want to see probably the last 1 or 2 years of W-2s, recent pay stubs. That's going to typically cover a lot of your cases. Then if you get into self-employed, right,
Mhm.
we may need to look at business tax returns if you have a corporation or a partnership. We'll need to look at potentially 2 years of personal tax returns if you have a sole proprietorship, right? So every situation is going to be a little bit different, but whatever your kind of basic income information,
Mhm.
that's the documentation that we're going to need to provide and support for the qualifying,
Mhm.
right? As far as assets, you may need to show reserves depending on the type of transaction, right? Typically, with a primary residence for conventional or government loans, the reserve requirements are usually minimal, right? So you're not having to show tons of assets to qualify.
And
Uh,
I'm sorry, how do
yeah.
they show the reserves? Did they give you bank statements? How do they show this?
Yeah, so usually we're going to want to look back at at least the last 2 months of bank statements,
Mhm,
and reserves can come in the form of checking and savings accounts, investment accounts, retirement. Again, certain programs are going to have restrictions on how much of that they want to be liquid accounts versus investment,
mhm,
but for the most part, when you're dealing with conventional or FHA or VA, right? A lot of that can come in the form of retirement or however those assets may show.
mhm. What is, like, if somebody called you and said, "Hey, Michael, what do I need to qualify?" You're probably going to be sending them a list of things that they have to prepare. What would be in that list?
So yeah, in addition to the basic income and asset documentation, we will need to get a copy of the mortgage statement. We're going to look at what's owed on the home currently versus what the value of the property is. We will order an appraisal as part of the loan process. And we're going to base that, we're going to use that equity to determine what programs you're eligible for. So those are the three main things. The other aspects that need to be considered are you looking to take any cash out, or are you just looking to refinance to reduce your rate or the term of your loan? At what kind of program are you in currently? Do you have PMI that we need to remove or that we need to try and account for in the new loan? If you have an FHA or a VA loan, you may be eligible for what's called a streamline refinance in certain cases. And a lot of the time, those are reduced document loans. So while the actual qualifying itself is going to function very similarly,
Mhm.
um, what you may be able to do, or kind of quote unquote shortcuts you may be able to
Yeah,
take, is going to depend on your current loan and what the new program you're trying to take advantage of is.
perfect. Great. Yeah. If someone had to apply for disability recently or unemployment, would they still be able to qualify for a refinance?
Yeah, absolutely. So when you're talking specifically about short-term disability, right?
Yes, yes.
Okay.
Temporary. Yes.
Yeah. So when you have temporary disability, there's a number of different factors that are going to come into play. Primarily, we're looking at what is your proposed return date to work
Okay.
versus when is the new payment, or I'm sorry, the first payment on the new loan going to happen, right? If you're planning to return to work and we can confirm that with your employer prior to the first payment on the new loan, then we can, in most cases, use your regular full-time income, right,
Mhm.
prior to going out on disability.
Okay.
If the timing is going to work out to where you're returning to work after that first payment date, then we need to look at, okay, what kind of reduction is this resulting in as far as pay, right? So if there's no difference, if you're being compensated equal to what you were making prior to the disability, we can use that, right? If there's a reduction, then we need to account for that in our debt to income ratio.
Mhm.
Now there are specifically with Fannie Mae, I know there is an opportunity if you have significant financial reserves, meaning enough assets, money in the bank, you can supplement that difference between the reduced pay and the regular pay.
Mhm.
So there's some creative ways that you can still use that income, but short-term disability by no means will disqualify you from a loan in and of itself.
Okay, great. I mean, that is very helpful because I know someone personally who asked me that, and I'm like, you know what? I don't really know the answer to that question. So I'm
Yeah.
going to ask Michael that, and I think that's really going to be helpful for her. Are there any programs at all available for experienced home buyers or refinancers?
Yeah, absolutely. So you know with regard to first time home buyer programs, a lot of the time what we're talking about is things like down payment assistance or programs that are going to give some reduction to interest rate, to costs, or to, like I said, assist with down payment, right? And so the there are programs that will require first-time home buyer status, which means you have not owned a home within the last 3 years. And those would be, the most common one these days is the CalHAFA program.
Hmm.
Um, but there are also programs out there that will let you do down payment assistance, such as GSFA, that's Golden State Finance Authority,
Hmm.
that does not require first-time homebuyer status.
Hmm.
And with each of those programs, you can get a certain percentage of both down payment and closing cost assistance.
Hmm.
Um, so there are options on both sides.
Hmm.
The other programs that sometimes get labeled as first time homebuyer programs
Hmm.
are FHA, which is not a first time homebuyer program. You are required to occupy the property as a
Right.
primary residence, but there's no requirement that you don't own any other property as long as you're moving into the property once you finish the purchase, right?
Hmm.
Same goes with a refinance, right? If you're doing an FHA to FHA refinance,
Hmm.
you're eligible as long as you're going to continue to occupy the property.
Are there programs for refinancers?
Not not necessarily, other than what I mentioned earlier for the streamline programs,
I see.
right?
Okay.
So if you have, for example, an FHA streamline,
Hmm.
that's going to significantly reduce the amount of docs that you have to provide in a lot of cases. In fact, you can usually, as long as nobody's coming on or off title, you can typically qualify for a no doc qualifying, meaning you don't need to submit any income, any assets,
Yeah.
and in most cases you do not need an appraisal. The same goes for what's called a VA IRRRL loan. We call it a VA streamline because obviously that's not as much of a mouthful,
Yeah.
um, but that's going to be the same thing, right? You're not required to have I'm sorry, you can do a no doc qualifying in that case, as long as there's no changes to who's obligated on the loan or the ownership of the property.
The question that I get asked is it possible to get a loan estimate without running their credit first? So,
So the short answer is no, right? To get an actual loan estimate,
mhm,
we would have to have a full application completed, which is typically going to come along with a credit run
mhm,
and income and asset documentation,
okay.
right? Now that being said, we can have a conversation up front and get an idea of what a loan's going to look like,
Okay.
right?
Mhm.
Um, it comes with the caveat that until we see documentation, nothing is set,
Yes.
right?
Mhm.
So there's a middle ground, right? The actual disclosure of a loan estimate
Mhm.
usually will require a property address and all the other documentation that we talked about earlier.
Yeah.
But if you're just trying to get an idea of, does this make sense
Yeah.
without having to pull all your documents together and submit them, absolutely, we can explore that.
Great. Okay, that's good information. Just a couple more questions here, and I think
Mhm.
we're going to be able to wrap this up. Will their forbearance affect their ability to refinance in the future?
It definitely can, and we're seeing that question come up quite a bit these days, because obviously, everyone was hit hard last year,
Yeah.
right? And so for Fannie Mae and Freddie Mac, they have pretty much said, as long as the loan is brought current, right? So specifically dealing with a forbearance instance where, maybe two or three payments were missed, but that balance is still due, right?
Mhm.
Nothing has been deferred to the end of the loan,
Mhm.
and you're making the payment to bring the loan back current. Fannie Mae and Freddie Mac have basically said, as long as it's your money that you're using, we're okay with proceeding with a refinance, right? FHA has said that once you have completed a forbearance program, they require 3 months of timely payments to be able to move forward. In most cases, there is something that can be done if you've been in a forbearance program.
Mhm.
When you get into specifically deferments and when there was a loan modification involved,
Yeah.
meaning if you took those skipped payments and put them to the end of your loan or anything like that, there tends to be a little bit more paperwork that needs to be done, obviously because that's kind of the next tier of hardship, right?
Yeah.
And so that may change the situation a little bit.
Mhm.
Um, but anything that is a conforming or a high balance loan amount, there's probably something that we can do on that. Jumbo is where you start to kind of run into issues. There are some lenders that just by default will follow Fannie Mae or Freddie Mac. There
Mhm.
are others that have said, you know, plain as day, if you've done forbearance, deferment, any sort of loan modification, we will not lend to you. We usually don't really have a time frame set on that, right?
Yeah.
So you're talking probably at least a year out from the time that you finish that program to be eligible again for any of those loan programs.
I see. Okay. Well, that's good to know. And I think I've been asked that question at least,
It's
4 or
it's
5
a
times.
very
Yeah.
common one these
Yeah.
days. Yeah.
In the last month. Considering, if somebody went through the refi from start to finish, what is the timeline right now for refi?
About 60 days on
60 days.
average.
Okay.
Yeah, we're starting to see the backlog of the backlog of refinances that we had
Mhm.
start to clear out.
Okay.
Um, so we're hoping we're moving the needle in the right direction.
Everything I know, like I said, it would be very basic, but I know it's impossible, to talk about refi and not dive deeper into the details. And I think the best thing is for them to consult with a professional like you and experienced um, lender like your company to get all, because everybody's situation is different, so
Correct.
it's going to be tricky. But I think we covered some of the, at least these are the questions that I've gotten in the last month,
Right.
because everybody's seeing the interest rates, so everybody's like, okay, we want to do a refi, or what, I just had a forbearance, or I just applied for disability. So these are actual questions that I got, and I think you did a really good job of answering them. I know a lot of people will find this short video very helpful. What I'm going to do is leave your contact information at the end of this video. If they want to ask you any more questions or need more information, they can contact guys. Michael and his team are very knowledgeable. He is backed by a team that has years and years of experience, and you're going to be in good hands working with them. I've worked with Michael on some deals, and so yeah. Any final words? Any tips for those that are looking to refi, Michael?
No, I think you hit the nail on the head. Our goal, myself and the Mark Johnson team, our goal is always to just be a resource, right? So we get a lot of clients who call and say, I don't think this can happen, but I figured I'd ask, right? And you'd be surprised how often there is an avenue for them to take, right?
Yeah.
So we're happy to brainstorm, we're happy to put a plan together, even if it's not right now, if it's 3 months, 6 months, a year from now. I know it can be intimidating to
No.
talk to lenders sometimes, but this is what we're here for. Use us as a resource.
No, I think that's a good thing that you said. That's what I like about working with you and your team. Honestly, it's like it's you guys have so much information to give, and you guys don't pressure people. You give them all the options. You do an in-depth like analysis of someone's situation, and if it's not time, it's not time. But if it is, then you give them everything they need to move forward. And I like that about working with you. So that's why I keep
Thank you.
throwing clients
Thank you
at
very
you.
much.
But thank you again for taking this time. I will definitely talk to you again soon. And yeah, I have a good rest of the night, and we'll catch up.
All right, sounds good. Thank you, Raquel.
Thank you.
Talk to you later. Bye.
Okay, bye.